Yo, what is going on, guys? Welcome back to another video. So in today's video, I'm going to show you how I scalp the market, guys, with high efficiency. And the best thing about it, right, is that it doesn't matter. You don't have to specifically trade with the trend. Okay, so real quickly, guys, before we get started, I wanted to let you guys know that we are currently helping people pass their challenges, and not only are we just doing HFT passing, we're also doing passing of all prop firms. So if you're interested in that, make sure to head down. The link in my bio is down below. We also do offer account management as well. As you can see, we've been absolutely killing it. So if that's something of interest to you, make sure to head down in the description. As well as that, guys, you can join my free Telegram mentorship right here, where I'll be posting a lot for you guys, showing you setups, etc., dropping videos for you. So make sure you join that down below in the description as well. So let's get straight into the video. Scalping. Scalping, guys, is extremely important, first of all, to be able to have awareness of your market structure. It doesn't matter what direction of market structure that you trade, but it's extremely important to have awareness of where you currently are in the market. So for example, okay, here I caught a gold buy last Friday, and it was on the 1 minute time frame. In order for me to have caught that gold buy, I need to have fairly good awareness of where I currently am in the market. So if I use my replay tool right here and break everything down, we can see overall, look, gold is very bearish. Okay, gold is very bearish, but that doesn't necessarily mean that you just only look for sell setups. You can also look for buy setups, and these are essentially just short buys in order to continue the trend to the downside. So what we see right here is we see an untapped order block or supply up here, which we want price to eventually reach up to. This area right here acting as going to be my inner liquidity. So it's going to be my inner liquidity that's going to sponsor this move to the downside. That is what I'm looking for, correct? Now, what I also see down here is on the lower time frame, price essentially broke the structure. And as you can see, we had a market structure shift right here, break it, and now we came back down. We wanted to retest that area once again in order to look up, push up, like so, tap into my zone, and then continue down lower. So this is what you want. So the main thing for scalping is you can scalp with the trend. So a lot of people, you can also look to scalp the trend down here, but you can also take a look at scalping the pullback, scalp the trend, and also scalp the pullback. So it's very possible. How do you do this? As I said, awareness of market structure and also understanding of your liquidity. So as you can see right here with this move right here, and as I was saying, I wanted to look at a buy from this area. We had inner liquidity that I wanted to see right here. Understanding of the three market phases, which is something very important. And also, if anyone is wondering, my course right now is only 99 euro. This is something that I haven't even promoted in a very long time, but it's 50 lessons. Everything that I be teaching you right here is even more advanced in that course. It's 99 euros. It's the cost of shoes. So if you want to get access to that, the link is down in the description as well. And one of the things as I teach in that course is the three market phases, and I want to see the market a lot of time consolidate, manipulate, and then eventually trend. So as you can see, this was our consolidation right here, and this was our manipulation to the downside. The manipulation to the downside for me a lot of the time acts as my entry trigger. This is when I want to get into a trade on the manipulation right at the bottom before the trend continues higher. Okay, so hopefully you understood all of what I said there, and this is it. It's as simple as that. So right here, this would have been the area where I would have wanted to look for buys from. So this one right here, and price might have missed out by 1 pip. It doesn't really matter to me, and I'll show you why in a second. Now, what I like to do is I like to take a look at the 1 minute time frame, and that's how I get into my setup. This is how I scalp it. So the first thing that I need to do is be aware of the market structure, be aware of the liquidity, then find a point of interest to enter from on the higher time frame. Usually the 1 hour points of interest is where I'm looking at. Also 4 hour 2, and anything in between the 1 to the 4. Okay, next I want to drop down to 1 minute time frame, and as we tap in, guys, what I want to see is a reaction. I want to see a push away, indicating that, you know, the buyers are essentially stepping in from that zone. Now you can only do that so much with price action. If I drop down to the 1 minute time frame right now real quick, this is it right here. As we tap in, we start seeing, boom, now we get a shift. Okay, you want to see a shift in market structure. Now, some can argue that that is the break. Some can argue that it isn't. I'm going to show you two entries regardless of which side you're on. I'm still going to show you two entries. Okay, now you're not going to be able to actually know if the market, especially when looking at these lower time frames, it gets very difficult. So you're not going to be able to know if the buyers are actually truly stepping in from this area or not. This is where I use the order flow footprints, and by now guys, you've seen the order flow footprints on my channel a lot. It's a very powerful tool that enables me to see the strength of the buyers and sellers on each side. The volume can only tell you so much, okay, because the volume only tells you the strength within that candle, within that range. Whereas the delta, which is right here, all these delta numbers, which is giving me the executed contracts on both sides, essentially it's giving me information as to how much stronger are the sellers in comparison to the buyers, or how much stronger the buyers are in comparison to the sellers. And this is very important, because the sellers can be extremely strong as we come down, which is the case right here. But if you get enough buyers stepping in that even though the sellers are so strong, but the buyers outdo the sellers in this area, this is where you get that flip. This is where you get that reversal, and this is what causes the market structure shift, or the change of character in direction. Okay, so as you can see right here, as we were stepping down, it's very strong selling. This is indicated by the delta, guys. And look, the max delta essentially is going to mark out the buyers first, and the min delta is going to mark out the sellers, and we're comparing each and every single one of these to see which one is stronger. As you can see, as we tap right into my position, my order block down here, this is the 2 minute time frame, but I usually look at it on the 1 minute time frame. I'm just using the 2 minute because it's easier to look at. So this would be right here, and as you can see, comparing the max delta to the min delta, 100 to -5, 82 to -1, 36 to -3, 73 to -2. The comparison right here, look at the flip. We went from -318.16, -157.21, etc. So the sellers are much strong and the buyers are non-existent, to, as we push away, the buyers are extremely strong in comparison to the sellers. This is a beautiful sign. Now, because this information will only be clear to me after a few candles print, this is where my entry comes in, because I can't enter straight away because I'm not able to see if the buyers are strong enough or not until a few candles print. So I let a few candles print, and my entry is then, as I said, on the lower time frame, on the 1 minute time frame, I simply just wait for that retest. So right here, I mark out this area. A lot of time, the way I do it, guys, is I would look at the high that got broke. So this is the high that got broke right here, and I would simply wait for a retest of that high. But since this got broke by a tiny bit, you can literally just mark out this 1 minute demand or institutional kind of order block, whatever you want to call it, right here. This is going to act as inner liquidity, and we should see a push up. Where I target for liquidity is very easy. It's just the high right here. Why? Because this is going to be that inner liquidity. Remember that I eventually see price going up to that order block in order to sell from. So it's all about awareness of market structure and where you are in the market. It's very important that you form your setups around this. So as we tap in, boom, we tap in, I enter my buy setup. I've already gotten enough indication that the buyers are very strong in this zone right here. I enter the buy setup, and price continues up, fails to break this high. It's now retesting, and this is where, as I said, people can say that, you know, a lot of people might not have taken this setup because it didn't fully break above this high. So you would essentially just wait for price to come back to that high. You have your entry, your buy limit right here, wait for price to come back to that high and execute once again. If you actually take a look at the 50-minute time frame, this is an order block right here as well. So it's all about how you look at it. Just the 1 minute time frame break and retest is very simple to spot. As price comes back down, boom, this is my entry. Let's get into the trade. And once again, you're targeting this high, boom, you target that, absolutely smash it. This is a beautiful 4-to-1, 3-to-1 setup in literally a few minutes. And that is pretty much it, guys. It's as simple as that. And the beautiful thing about this, and if you're already in my Telegram channel, you'll be seeing that I keep rinsing and repeating this setup over and over again. Why? Because it's also very mechanical. It's simple. It's as simple as 1, 2, 3, 4. It's as simple as that. Like, you see the setup, you take it. You don't see the setup, you don't take it. There's obviously going to be a learning curve for the order flow, understanding market structure, liquidity, but is that worth it? Because the stability, the effectiveness, and also the high probability of this strategy makes it better than 99% of the strategies out there right now. As I said, guys, if you're interested in getting access to the software, make sure to head down the link in my bio for the next 7 days, guys. For the next 7 days, there's a discount, €50 off, so you're only paying €350 one-time payment for the software plus the course, or you can pay €60 a month for the software plus the course plus indicators that we have coming up very, very soon. So we're going to announce that very, very soon. That's going to even help you automate your trading even more. So if you're interested in getting access to that right now, it's a very, very, very small price to pay for what you get, for how you can completely change your life and get funded. So as I said, if you're interested, now's your chance. It's the cheapest it's ever been. With that being said, guys, I appreciate every single one of you for watching all the way through to the end. Make sure to join the free Telegram mentorship. If there's any new setups, I'll update you on that there. Have a good day, guys. Bye-bye.